I'm Matt Bichard. Welcome to the monthly quick study of the REIT market with NAREIT economist Brad Case. So Brad, with many areas still feeling the effects of Superstorm Sandy and the ultimate cost of that storm not being known, I wanted to get your take just kind of in general. What impact do weather-related events like this have on the market overall?
You know, even fairly large weather events typically have a very limited impact on the overall market. Investors will look for particular companies that are more heavily affected. Insurance companies are an obvious choice, and in this case, the storm affected a part of the country that plays an important role in the economy. You know, the New York, New Jersey area, and that general part of the country. But the U.S. economy is very resilient. It's very well diversified, both in terms of what sources of earnings companies have and in terms of the geographic distribution of their activity. So typically the markets are not badly affected, even by very strong events.
And overall in October, investors had a bit of a tough go. What do you attribute the dip that we saw?
Well, it wasn't much of a dip for REIT investors. You know, the broad stock market lost nearly 2%, but REIT investors lost only 1/3 of 1%. And so, you know, but you're right. It was a soft month in general for investors. I think I attribute that mainly to continued uncertainty about the outcome of the election. In fact, if you think about what happened during October, a large part of what happened during the month was an increase in uncertainty about what's going to happen on Election Day, both with respect to the White House and with respect to the Senate and several other races. So investors never like uncertainty, and when that uncertainty gets resolved, you typically see improved investment returns. And I think what we saw in October was a little bit more uncertainty about the election.
For the year, the FTSE NAREIT All REIT Index is up more than 17%, and those gains have been seen across all sectors. However, the gains in the multifamily and lodging sectors have been a little lower than some of their peers, even though those sectors have seen some of the stronger fundamentals. What do you attribute those results to?
Well, I think there are two different things going on. In the multifamily sector, I think I've said before that I believe that markets are overreacting to some good news that we've seen about the owner-occupied housing market. And basically, investors have an overall good analysis, which is that when supply of residential housing units increases, and we've seen an increase in residential construction, when that happens, typically you see a reduction in occupancy levels or rent growth in multifamily. Similarly, when there's an increase in purchase activity in the owner-occupied part of the market, that's a reduction in demand for multifamily rental units. So the broad outlines of that analysis are fine, but I think investors are way overreacting because we think that there's a gap of roughly 4 million housing units, and it'll take years to work through that. I think on the hotel side, I think I go back to my mentioning of uncertainty. There's uncertainty about the strength of the economic recovery, and the lodging sector really depends on the economic recovery, both for business travel and for vacation travel. But the third thing that's, I think, affecting those is that, especially with respect to multifamily, the recovery hit the multifamily sector earlier than it hit everybody else. So in a sense, multifamily is lagging now simply because the rest of the market is catching up to it.
Lastly, I wanted to get back to the election and the uncertainty that you talked about. So I assume that once the election happens and that uncertainty is gone, the markets will respond. But is there precedent to how the markets respond following a presidential election? What
moves markets is new information. What moves markets is surprises. To the extent that there are surprises, then that'll move the market one way or the other, depending on which kind of surprise we have. But right now, we're looking at what's probably a very close election. But there's not, you know, but market participants have worked really hard to try to figure out, try to predict which party and which candidates at several different levels are going to win on Election Day, and what that's going to mean for public policy that affects the markets.
Brad, thank you again for your insights. For more on this and other REIT news and analysis, be sure to visit REIT.com.